terms of interest rates, I mean, we've seen treasury bill rates, for example, now moving into single-digit rates. Do you see this as a sustainable point? And what do you expect in terms of lending rates as well? Do you see a further drop, or what will we see in the next couple of months and couple of quarters?
Good afternoon. First of all, thank you very much for having me. To start with, it's an interesting question. So maybe 3-4 years ago, we have seen interest rates at 4-5%, and then we have seen it's going up to 30%. So now within say 10 to 11 months, it has dropped once again to single digits. So our expectation is based on what we see, the circumstances and facts, it will more or less remain, and there will be further opportunity for it to go down a little bit. We expect with policy rates coming down to maybe about single digit between 8, 9 and 10, and treasury bills and bond rates coming within the policy corridor. So there is further room for improvement in the rates downwards. So what we will see, given the inflation expectation of the country is 5%, around 2% plus or minus, which is now becoming kind of a gazetted number. So there will be interest rate being used as a tool in that sense to control inflation. So then what will happen is interest rate will pressure downwards, and we will see perhaps deposit rates hovering around 7 to 8% in maybe next quarter or two, and lending rates perhaps around 10 to 12%. So by any chance, if policy rates come further down from 9 to 10 to probably about 8 to 9%. So then this will sustain for a while. So what is interesting is all this time, maybe for last few years, we had an interest rate arbitrage in the market. That arbitrage has now gone because now the treasury bills have come within the policy corridor, and AWPLR is well above the policy rate corridor. So then that arbitrage has gone. So that means banks now will be forced to deploy funds elsewhere rather than putting money in the government security. So all in all, what we will see, we expect interest rates to continue at this level. Perhaps there is opportunity to come down a little bit. Deposit rates will be low. That means depositors will be forced to invest money elsewhere rather than keeping money in deposits. That at some point should spur economic activity and go into some different asset classes than going into FDs in the banks. Lending rate should remain low, maybe around 9.5 to 11.5, 12 being the maximum, as much as the policy rates come down to 8 and 9. So then that will propel lending. So that's how we want the interest rates.
Sure.